And good morning, everyone, and welcome to the Triggercharts pre-market rundown for January 8th, 2021. I'm Andrew Horowitz. I'm the co-founder of Triggercharts, and I want to thank everybody for joining me and for being here. You know, what we do here is go over some of the markets, what's happening from an economic standpoint, from a fundamental standpoint, as well as, more importantly, a technical standpoint, to give you some trading ideas and more of an education. While we're on that topic, I want to mention that this is for educational purposes only. This is not an offer to buy or solicitation to sell any security. And make sure you read that right kind of over there, wherever it is. That disclaimer that is on the screen right now that I am hovering over so you can see what's going on there. Well, we've been gone for a few weeks, a lot to talk about. Obviously, markets have been incredibly resilient to all sorts of news. You know, if you think about what's gone on over the last several weeks, there was the idea floated that, hey, you know, if we get a Democratic president, markets are going to fall. If we get a blue wave, markets are going to fall. If, in fact, we see a spike in the virus, markets are going to fall. If we see that there is going to be a runoff in Georgia where we see that the Democrats have or at least the majority, or at least a tie in the Senate with the potential for Harris breaking that tie on certain votes, well, markets are going to fall. And we had an insurrection this week. And the idea was, well, markets are going to fall. Yeah, there was some take back in the markets, but if you see what's going on right now, especially with today's news of unemployment, with a loss of about 140,000, I think it was 140,000 jobs lost for the period, markets are supposed to fall. They aren't. What is that telling you? That's telling you that there is an incredible amount of resilience involved in the markets. When you look at the speculative nature of the markets right now, the frothiness, the FOMO, all that's going on, you have to respect what you see. It's a very, very difficult time to start taking the other side of the trade in a big way. It's one thing about nibbling here and there. It's another thing about all in. Now, with that said, realize that one of the things that we do at Triggercharts is we color-coded things. You look to the right here, and you take a look at what we're looking at on the right side of my screen right now, and you can see that everything's color-coded. You got very simple. You got red, yellow, green, orange, every once in a while a purple, and gray. Gray means, hey, this is not a trade right now. Yellow means, hey, there's an alert. There's a breakout or a breakdown happening. Red means, hey, be long. More importantly, though, we have these little lines on here. They may seem like just, oh, what are those lines? Those are key support and resistance levels. And something I want you to understand for all of you that are utilizing this, or for all of you who haven't tried it just yet, these lines signify something really important. It's very simple. Write this down. Above the red line, above the resistance, do not be short. Below the green line, below the support, do not be long. Until you can get to a point where you have a new altimeter or market profile drawn basically on this. This is our swing market profile, which we go over when we'll get to some of the stocks. But there's some significance here that you really need to pay attention to, and I think that the significance is really important to recognize. All right, let's talk a little bit about what's going on here. By the way, thank you still for making us the #1 indicator. Welcome to 2021. This is going to be your year of trading profits. I am telling you that if you pay attention, if you stay by the rules, if you are disciplined, and you trade with conviction, that's important. I think that you'll have a very good year here by using some very simple techniques and rules along with the strategies that we put forth in the Commander series, which, by the way, there is a 10-day free trial over on the TradeStation Trading App Store. Any information about that is on either the mailings that we send you or on triggercharts.com. You can go there and check it out. So let's start off with where we are in 2021. We talked about the resilience of the markets. That's really important. We talked about the incredible amount of liquidity for the last several weeks before we took that break into the end of the year. There's a slight change of theme that we saw kind of towards the end of last year and into the start of this year. And that was that interest rates were starting to come up a little bit. There was an idea that with the vaccine, the economy will heal a little bit more. And there was a rotation. That rotation favored the banks, the energy stocks over the technology, the healthcare stocks. So when you look at what's gone on, actually, we've seen energy shares, pick your poison, pick your name, Those that were forgotten for a long period of time. Maybe it's a catch-up trade. Maybe it's a reversion trade. Maybe it's just the expectation that there will be a lot more economic activity into the future that is really sparking the interest of a lot of investors right now. Whatever it may be, energy, XLE as an example, the ETF that trades the energy shares has been on fire, absolutely on fire, blowing away other areas, infrastructure names, the shovel ready idea, because now with the idea that we have a Democrat in office and more importantly, Biden's agenda, have you taken a look at the green energy concepts, right? EV vehicles, electric vehicles. Have you looked at the solar companies? Amazing run recently. And what's interesting is you would have thought it was over towards the end of last year where they were peaking out. But as we got closer to the Georgia runoff, people got very excited with the fact that a lot of the agenda that, whether you like it or not, the agenda that will be put forth could actually see some significant opportunity for passage. So again, this whole idea of sell-offs, if the Democrats win, didn't work. We do have a little bit of a speculation mania with the SPACs, and that's because of the excess amount of money that's coming into the markets. When I talk about liquidity, there's 2 points of liquidity that we talk about. One being the liquidity from the idea that there is money somehow through the M1, through the Fed, through stimulus that's being pushed into the economy. And that always finds its way into risk assets. It may not be immediate, but eventually, as long as we know that there's going to be a continuation of that, we do see that continue. Now, with that in mind, the theme that we have going into 2021, until such time as this theme changes, is one, liquidity is plentiful. In fact, there's the idea floating around that liquidity could really get even greater if we do have this down payment idea move forward. What we heard from President-elect Biden now, almost to be President Biden, is that this $900 billion stimulus bill was a down payment on the next set of stimulus that's going to come out. Down payment, $900 billion. So are we talking about 10% down payment? We're talking about $9 trillion? Are we talking about a 20% down payment, 30, 40? What are we talking about? Maybe it's a 50% down payment and we're going to get another $1.8 to $2 trillion next shot. And if that's the case, and if that's what they're floating out there, it doesn't just go into the hands, unfortunately, of the people who actually need it. It goes into the hands of a lot of people, and that always seems to find its way into risk assets. That's why we're seeing that. The yield curve, interestingly enough, is steepening. The idea that we are seeing a time when there is economic healing while we still have low interest rates, while we still have a lot more stimulus coming in, is really helping out the banks. That yield steepening that we've seen, that widening of the yield curve overall, is something to really pay attention to. I'm kind of interested as to why that's not really impacting the tech companies. All the things that should be impacting tech companies right now, vis-a-vis the Democrats coming to office, talking about breaking them up, and then talking about the idea that there is the potential for higher rates in the future, but more importantly, we see the dollar start to come up a little bit recently, should be impacting the tech shares, and it's not. We see the Qs are up this morning 75 points. We see this SPOOs, or the ES, this is the NASDAQ 100 here. The S&P 500 up 13, and the YM is up 77 after Boeing is now agreeing to pay $2.5 billion for all of their bad dealings on the 737 MAX. So I think the real theme is this right here. Look right here. How much worse can it get? I think there's a feeling that has permeated a lot of investors thinking that, what worst things can happen? Let's think. Well, we could have an alien invasion, meteors from space, nuclear war, but all those mean that doesn't really matter how I invest. We had a pandemic where we had a stay-at-home order that's still going on. The pandemic is still raging on, by the way. But, it doesn't seem the same for a lot of people, I think, that it did back in where we had it in March. And I think that has to do with the idea of the frog boiling philosophy, right? You put a frog into a into a hot pan of water, boiling water, he's going to jump right out. You put a frog into a cool, warm pot of water and you turn the heat on, slowly increases. Eventually, you're going to have frog soup. They get used to it. People get used to things. We're getting used to the idea that we have to work from home, that there is a pandemic, that we can't eat out, that we can't socialize with a lot of people, that there's not going to be weddings, there's not going to be travel. I think that a lot of people have rationalized what's going on and thinking, well, if it gets worse, what's the big deal? Because if it does get worse, we'll have more stimulus. That's the thinking right now. And how much worse can it get? If all of this is being thrown at us and we have markets reaching all-time highs on a daily basis, so what? Now, I'm not saying that's my philosophy. I'm telling you that's what I think is out there right now. You may be thinking the same thing as well. Like, what the hell? I'll invest. Do it with discipline. You'll make a lot more money, I think, doing it that way. That's my perspective, of course. Obviously, we know there are disclaimers that go along with this, right? You can lose money, that investing is aggressive. It is risky. There is a chance of losing all a part of your money. So just remember that. That's why you need to have a high commitment to your trade. You have to have a high level of overall ability to understand, okay, what are my gain potential? What are my loss potential? And that being the case, am I willing to take that trade? I have a poll. Let's see my poll. Let me find my poll. I want to do a poll. Here we go. Just to kind of get a feeling of where everybody is at right now, I'm going to launch this. I'm going to talk in the background. The poll question is, what is your favorite crypto trading instrument? And it's either direct or or original, right? Directly in Ethereum, directly in Bitcoin, directly in Litecoin, or whatever it is, through some platform. Or you're not trading, or you're using futures, or you're using ETFs. But let me just go back to the FOMC meeting that we saw last week and what we talked about over the last few days. FOMC, the Fed, is not changing rates until 2021. There has been some discussion over the last few days that is creeping into the markets about the idea that, hey, you know what? Maybe we will start tapering a little bit. Now, what they're doing here is they're setting you up for the potential that, hey, we warned you. And slowly but surely, this idea of tapering has come into play. And that's why probably we're seeing that bond yields are starting to rise. But probably the tapering is going to be, I would say, minor. Because they can. As long as rates stay reasonably low, the U.S. Treasury can keep on issuing debt, and as such, they pay very little to do so. So this is dovish sentiment overall. At the same time, they have high hopes for a big economic turnaround, which is a little bit weird. Let's keep going down here. Let's talk about that. Everybody got about a few more people that would have to vote here. What about these vaccines, by the way? Then we'll get to our crypto poll. What about them? Not a concern until it's a concern that, hey, we are not getting them out so fast. The problem is, are they going to be effective? We need 2 doses. We have a few that are a bit approved around the world, but yet we have about 80% still in inventory not being sent out because, frankly, governments are crappy at any kind of administration. They didn't plan well. They aren't planning well. They're trying. I'm not saying they're not trying, but we know that when we deal with government, especially when there was a lack of funding that was in the first CARES Act for all this, and they had to scramble around to put it together in the next one, that funding is going to start, but yet at the same time, there was no planning done, and that's a real problem. We've said many times that, hey, you know what? We should do a couple things. First, have vaccines at Starbucks. So go through the line, get their coffee, quick vaccine, and move on. How about Chick-fil-A? Go through the line, got a couple of different lines set up there, get their chicken, get their sandwich, get their fries, and then get a vaccine. They'll do a lot better job. The private industries of the world will do a much better job. And why government is attempting to try to do this is mind-boggling. Now, of course, the Starbucks idea and Chick-fil-A is a little bit weird and probably not going to happen, but nonetheless, just something of interest to look at. Valuations, we talk about also. And I think that the big issue, we talk about vaccines, getting out of valuations. Again, technicals are your best friend in this kind of market environment. I think that when we look at the technicals in this kind of environment, you really need to pay attention to them because valuations really are to be thrown out the window. I don't say that I don't say that easily because I think valuations are a big part of the longer term story. And if you buy wrong and you're a long-term holder, you could get vindicated long-term into the future. At the same time, if you buy and you're a swing trader, you can get hurt pretty badly. So let's take a look at our polling. So here's the percentages. Interesting. I think this is really interesting. The overwhelming majority of people that were polled about, what is your favorite crypto trading instrument to use? 53% said, hey, I don't do any crypto trading. Interesting. ETFs, 20%. There's only a couple of ETFs out there that you can do that with. And 27% said direct. So that's kind of an interesting pulse on the environment. I wonder if people want to do it, but are concerned about it, concerned about safety and all that. It's possible. Earnings. Next week starts earnings season. We have some of the big banks coming in. Then after that, a couple of weeks later, some of the big tech companies, Apple, etc. Valuations are stretched. Make no two ways about this. Valuations are stretched, and earnings season is going to be really important. But again, if you utilize some really good technicals, you understand where those buy points are on pullbacks, where you can actually get in on a trend, a longer term trend that maybe is in an uptrend, and where those opportunities lie for where you can buy something. I'm going to show you something on Workhorse Group in a minute, and we'll go through that because I think that was there was an interesting example of that yesterday. All right, what else we got here? Economics, manufacturing was strong. The ISM was 60 plus, services 57 plus. The employment report we talked about today. Next week we have the CPI, the Fed's Beige book, PPI, retail sales, and the January University of Michigan preliminary result from the first survey of the confidence index for January. I would expect we'll see a little bit of a concerning factor there, but again, I don't know if markets are really going to care about any of this because everything else they're seeing is like, okay, what's the worst thing that can happen? Well, we go backwards, but who cares because the stimulus. I mean, seriously, that's what this is all about. You can start loading up some of your names in the chat box. Just put your symbols in there and we'll take a look. We're going to look at Dash, CRISPR, Triple D, Workhorse. That's the one I want to show you there. Edit, Fastly, Neo, and Tattooed Chef, and a bunch of other 3Ds. So what you're looking at right here, except for the bottom part. This bottom part, we'll turn this off for a second here. Here. So what you're looking at right now, for those of you who haven't seen it before, is actually the Commander series. You get four things really. You get the multi-time frame on the top here. See M30, minute 30, minute 60, minute 240, daily and weekly. You get an incredible amount of information on one stock in one row right here. You're not going to see this anywhere else on TradeStation. Nobody has figured out how to program this. Seriously, I'm not kidding. And our program is proprietary, so they can't see it. So they can't figure it out. So basically what you have here is if you go across here and you take a look, you'll see that, for example, on the SPY, there's a long profit that was called yesterday on the 30-minute, on the last bar. This is the last bar. 60 minutes, 13 bars long. The 240 is 4 bars long. We got a long alert yesterday. Let's bring up the SPY. If you click any of these, you'll see. See, we got a long alert yesterday on this. You were kind of in and out of this a couple different times. And then weekly, you got 9 longs. So long-term trend is what I look for first. Okay, where are we? You start from right to left. Always looking from right to left. And basically what you want to do on this is you want to start thinking about, okay, well, if I start going across here and I start going across here and I start looking at what I got, what is the trend? Well, we have, long, 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 this is an intermediate trend. It's changed a little bit, but not so much that I'm concerned. When you look down the list a little bit, you'll see the same thing, long, 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 long. And that was 3D systems. That's been long for a bunch of times. And look at what happened. Let's clear that. 3D systems. Look at that move yesterday. That was just out of control. It's been long for a long period of time. This is the daily. What went to a long alert yesterday, but the long-term trend of DDD on a weekly basis, when you look at the time frame, has been green since $7. So if you are in fact looking at going to a situation where you can find opportunity, you start with the longest term trend. Where is that trend going? If the long-term trend is down, you probably don't want to play it until you get to some really good support levels and then turn around. Anyway, let's put this back all together. One of the things I added was the aileron chart here. Let's take this daily, which is a momentum indicator. Now, again, all of these are a free 10-day trial. If you haven't tried any of these yet, I don't know what you're waiting for. Definitely go over to the TradeStation trading app store and do a 10-day free trial. It's fully open. It's no holes barred. And actually, if you do it, let's say on a Sunday, you get, well, let's see, what day would be the best day to do it? I would do it on probably on a Monday, because Sunday or Monday, you get the full use throughout the week, because I think it's 10 business days. But nonetheless, let's start off with some of these. Dash Dash a recent IPO. Too new and too young of a name to really start building significant amount of data for us to form our, yeah, these are all forms. See, they're all on. The radar's on, the autopilot's on, the altimeter's on. We have to wait a little bit longer. We can go back a little bit and probably like a 60-minute. We'll show that. That's something interesting. But what I want to show you here on this is how to look at, we talked about this before, how to look at IPOs. So DoorDash came out, it dropped, you know, remember that day that it came out, it flew up like 150% or something crazy like that. And then what we saw was it start to move down. So what I want to look at here is, you know, we start to see this kind of general trend moving lower, lower, lower. This nice basing right there. Now, this is not based on our market profile. This is not based on anything more than old school technicals, okay? What we could do here is, in this circumstance, and let me clear this so we can see, I would take my line tool and say, okay, where are we getting some basing? Look, it looks like it, for some reason, I don't know the reason, the bottom line is it was pretty and pretty significant, right? The support on this. So if it can't really get below these levels of about 139, it's worth taking that trade and see what happens. And lo and behold, went from 140 to 152, up 10% yesterday. So something to be looking at from an old school standpoint. And then you could say, go back in time if you want to look at these on a shorter term time frame as well. CRISPR, this has been an unbelievable, just an astounding trade from a long-term standpoint. What's interesting is it called a little bit of a short here, and then you kind of smacked in the face the next day. But if you look at this, and we talked about this a few different times, what these levels were, if you got above these levels. And we've been talking this back from 110. It's at 194 now. I mean, you go back even further, you take a look here. I mean, this is, I'm going to take the radar off here, clean this up a little bit. There's been some great trades that you could have done. The short side's really not been productive, to be honest with you, but the long side on this has been just dynamite. Triple D, we talked about this a second ago. Again, the long side of this has been great. You probably have some opportunity on the short side as well. But when I look at this and I really focus in on this chart, I want to kind of really focus in on this daily chart and get in close here and kind of talk to you about this. Look at the momentum, the aileron that we have on the bottom here. This aileron is showing us something really nice, okay? What this aileron is showing us is that back since November, we've been in positive territory. In other words, the momentum has been above zero and it grows. And even though it came down, there's a little bit of divergence. It was ever so slight level. It wasn't even a big deal. So in other words, that momentum never really turned down very strong. And then there was some positive blog mention about it. To be honest with you, it was a little bit over the top yesterday, that 100% move. And I didn't have this position, which I'm kind of not happy about. But nonetheless, you know, you can't have them all, right? So when you see this and you combine, what you do is you get confidence. The higher confidence you have, the higher commitment you can have. The higher commitment you can have, the more you can hold on to a position. So even if you only entered the position right here, you know, at about the about $8 level, and you just got out about the 12, that was a 50% rise on the position from the 16th through June through this about 1 month. So there are these opportunities. Again, this is a little bit skewed, this chart, because of this big bar that we're seeing right here. Workhorse is what I wanted to show you here a little bit. Now, Workhorse, we had a line in the sand that we put out about 21.29, but I want to change that for a second. I want to show you something. This is what I was talking about. Well, we could kind of connect a few different lines across. Take your line tool, your horizontal line tool, and just draw a line. It's in your drawing. You can do it one of a few ways. Either go drawing, click down there and go to horizontal line, or I put my drawing bar on the left side here to make it easy just to grab stuff. If I want to grab a box, if I want to, I just grab a box and I can say, you know what, let's look at this level here. If we do that is an important level, and just look at this from the aspect that there is some consolidation. If it does break above there, I'm going to get involved in this as an example. So we draw this line right here, right? This horizontal line right there, 2024, give or take. Actually, it's probably 2016. But you see that we have multiple lines on going from right to left. I've talked about this before, and I'm going to keep on telling you this. I want you to remember this. I want you to think about this. I want you to dream this. We look from right to left. We go right to left, right to left, right to left, and see what is out there, what blockers there are, if you will. What areas of support and resistance do we see out there? And right now, really what we see is this right there is about where we have that level of support. So if we draw that across right here, you can see that there's probably some upside to about the, we'll call it 28.50. Right now trading at about 28. Is it a hard line of support here? Well, possibly. Let's take a look. You know, maybe there is some support, excuse me, resistance. I said support, I meant resistance. So there you have it right there. You know, that is a line. You break above that, though, I think you're going to be seeing some significant upside on this. This is an EV play, by the way, workhorse. I like it a lot. Quick note from someone. James wrote in. He says, back in November when I was out of town and the guy who ran the Friday session talked about KSS. He said he took the trade and made enough to subscribe to the Commander series for just over 2 years. So that means one of two things. Either you don't want me here or you're just saying how happy you are. I think it's how happy you are. But that's great. Yeah, Kevin does a great job with this. Yep. So Kevin does a great job on that. So he's the co-founder of this. We can have him on more. He just had twins, by the way. He just had twins. If you want to send an email congratulating him, send it to support@triggercharts.com. Support@triggercharts.com. He just had 2 boys a few weeks ago. So he is now in that zone. Edit, this is another one that we talked about. Look at this range that we had identified here. And then when we saw that upturn right here, back in December, that upturn was fantastic. This is another CRISPR biotech company. Went from $40, it's at $89. That's a doubler. That's a 2-timer. That's a shot up. So that's awesome. Let's go through a few things. Fastly, I told you that I was really not happy about this move about Fastly. I said there's major resistance above the top line here. We got right into there, overshot a little bit, and then it fell down right from the 105 range to about 80 or so. Right now, we are finding, look at that, very important. We're finding support. Support right on that line that we have drawn here, right there. Look at that. You could draw these and just leave them on your chart. That's important. If you drop down below it, I do think you have the area of probably about 75, 65 that is in play. I would wait for the earnings to come out because I just don't think this all cracked up to what it is. Let me kind of make this, let me adjust my charts a little bit here. These are more of the same charts we've been talking about because they've been such great winners on trading. You know, you had another breakout here at 45. It's now trading at 54 and pre-market's at 57. This is, are we above? Are we above? Wait, hold the phone. Not really. 57.81. We are almost approaching all-time highs in the pre-market. This is a Chinese, they call it a Chinese Tesla. Tattooed Chef I thought was interesting. Again, one of these names that is starting to see a little bit of a move. You can kind of start seeing a cup and a handle develop here. You get above this, about the 26, what do we got? About $26 range. You should have an interesting perspective on this if we're seeing this drop. But more importantly, what I like is this 2264. This is, as we call it on DH Unplugged, a manipulated protein company, a company like a Beyond Meat. More 3D companies just rocking it out. Lemonade, just we talked about that. MicroStrategy. This is, they bought a lot of Bitcoin on their books, people playing it like a Bitcoin alternative. Someone mentioned Coke. Coke has been it's not been good. No, that's not it. That's Kellogg. It looks even worse. So Coke, yeah, Coke came right into a support level, a mini support level, I'll call it again, because let me delete some of these. They're not meaningful. We see that with the aileron turn to the negative, that's not good. Good dividend on this. If you want to play this, I think there's an opportunity probably around 48. I picked some of this up some time ago personally. I have a nice gain. I sold out about right before the end of the year. So what is that? Right here. I sold out right about 54. And I sold out a third or half of my position. I don't remember exactly which one it was. Still have a small position waiting to charge back up. I would love for Coke to get right down to about 48 or so, kind of the bottom level of all these right there, right? If we draw that line across, kind of see exactly where that is, where a lot of things connect, they bounce off of. That would be the level. Why? This is kind of different things are in favor right now. Smog. It's a low, yeah, well, look at that. That's low carbon emissions. Just everything about green is going. I mean, you know, markets are on a march to their own drummer. Is this one symbol? Yeah, AI. Somebody asked me about this. Who is that? AI. Steve. AI is interesting. Yes, it get down to that level right there. There's a lot of gappiness, a lot of movement in this. I would think there's probably going to be some kind of, maybe 139. There'll be some resistance. We'll see. These things got a little bit of ahead of themselves. And then just to bring back KSS, where we talked about that in November. Wow. Yeah, there you go. Wow. Yeah, you would have thought that the department stores, right? If you were just trading on fundamentals only in this market, you say, oh, I'm not going near those department stores. Not happening. You start looking at the technicals and how they start to break out here, and you saw that there was nothing to the left. I mean, look at this. If you look at this, there's nothing to the left. You know, when you look from right to left, there's nothing going on right there. That's pretty interesting to see. So anyway, everybody, check out the free trials that are over on the TradeStation Trading App Store. Everything that you want to know about is over on Triggercharts.com. Thanks so much again for joining me, and I will see you again next week.